Welcome back to financial analysis. So let's talk about analyzing financial needs. First, we'll talk about explaining the nature of financial needs. So one aspect of developing a financial plan is to know the difference between your needs and your wants. Furthermore, you need to prioritize your needs and wants as you set your financial goals. As you do so, keep in mind your attitude toward money and ask yourself if something is more important to spend money on now or to save for the future. Having choices with money comes with a cost and with risk. Opportunity cost is defined as the trade-off of giving something up when choosing one thing over another. Financial risks that you should consider include the risks of inflation, rising or falling interest rates, loss of income, and liquidity. Liquidity is the ability to convert assets into cash without loss of value. Set financial goals. Financial goals are influenced by two main factors: the time frame in which you want to achieve them, and the type of need that inspires them. Goals can be short-term, which is usually 1 year or less to achieve, intermediate, 2 to 5 years, or long-term, more than 5 years. Also, some goals may happen every year, while others occur only occasionally. And lastly, develop a personal budget. A personal budget is a plan for saving and spending your money based on your income and expenses. Start with your budget by defining your needs and your goals, considering both short-term and long-term goals. Write them down in a list with a target date or time frame to reach them. Next, you will need to prioritize your goals, arranging the items in order of importance, and then you must estimate your income and your expenses. In your income estimate, include your wages or salary, but count only your net, which is your total take-home pay. Other sources of income might include tips, gifts, and interest. So estimate your expenses in two categories: fixed and variable. Fixed expenses are usually the same time each time you pay them, and variable are those that vary each month or each period of time. And once these steps are completed, you create your budget. You transfer your estimated income and expenses to a paper or computerized budget form. Indicate your savings on the budget as well. You may want to consider this a type of expense. As you compare your income to expenses, you should see if you have enough money coming in to pay all of your expenses. It is important to be honest and realistic when creating your budget, even if it means revising some things. Also, check your progress monthly and review your spending carefully so that you know if you have to cut back your expenses or increase your income.